The Dow also closing above its 200-day moving average. But is the S&P poised to continue the rally and head back to all-time highs? Well, our next guest says yes. Joining us now is Warren Pies from 314 Research. And Warren, lay this out for me. What brings us to fresh highs?
Yeah, thanks for having me. What we've been telling our clients really since the tariff drama started, Liberation Day, is that, look, there's too much policy risk and event risk lurking out there for investors. And so the best way to navigate that kind of environment is through technicals. Basically, what's price action telling us, and the idea being that there's wisdom in the collective price action in the market. And so that's what we've been watching. And as we've come through May, really early May, we had just a slew of technical signals fire, which point to new all-time highs on the S&P 500 this summer.
So why don't you like small caps?
Why don't I like small caps? I think that small caps, I have a basic rule for small caps, is you don't want to own low-quality companies when you're late cycle. And this is a late cycle environment still. I think the economy it's growing, but that growth is decelerating. The only time you really want to own small caps is like at the early part of a cycle, coming out of a recession, Fed stimulating, and you want high beta, low quality, and we're not in that environment right now. And it's been the trade now for years.
I just want to go back to some of this bullish technical evidence that you've laid out with your charts. Really contrarian evidence based on what we've seen in the market with around things like sentiment. That could propel stocks higher. We've talked a lot about it here on Overtime, but the fact that the retail investor has been participating heavily in this market, but institutional money, not so much.
Yeah, so I think in technicals, you want to look at two broad categories, sentiment and positioning, and then alongside that trend or breadth work that we do. And like you said, retail's been kind of buying the dip, which I think threw a lot of people off. And we look at our institutional positioning, and you can see that institutions are still backing away from the market and underinvested. And I think this V-shaped recovery caught them by surprise. So we see strategists lowering their targets, which I see a chart on the screen there. And so this is historically, we quantify all this. Historically, this is a very bullish sign going forward. CTAs, which is a big institutional trend following group. We look at DBMF, which is a big ETF, but that ETF tracks these CTA strategies. They're all short the market still right now. And then you look at like the AD line, which is another thing we passed on to your team. The AD line made new all-time highs in front of the market, and that's a very bullish development. We have other things as well. It's just, you could go down the list. So the technicals, the quantitative technicals with evidence behind them point to new highs. And I think it's also, you can't leave out the fact that we made a new high post Liberation Day today on close, which is, I mean, that's what you want to see if you're a bull.
Same time, you got these 90-day tariff windows closing during the summer. Based on how the market has responded to tariff news up to this point, how much of a monkey wrench might that throw in your theory here?
Look, I mean, it's a big risk. Just like no one saw Liberation Day coming. But what we've said from the get-go is that if we zoom out, this could be a volatility-inducing event. But we think that the market is going to lead us in the right direction, that the collective wisdom of the market is going to see through this stuff. And I think that's what people started seeing early on, is like, if Trump pushed forward with the tariff policy that he unveiled on April 2nd, we would have a massive negative feedback loop hit the White House. The Republicans would be swept out of office. It would be disastrous. And I mean, I think Trump, if anything, he's shown a tendency to have self-preservation. And so I think it's consensus, but I think it's the right position to assume that these things are going to get resolved. And ultimately, any good bull market needs a wall of worry. So we need to set up a bunch of things to be concerned about and then knock them down. And quite honestly, I'd rather be worried about these types of things that are in the control of somebody who really doesn't want the market to crash than something I can't really predict or weigh out the probabilities of.
Okay.